Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your midday market update for Monday the 26th of September. Well, here we are, the first day of the last week of September and also the end of Q3 coming up on Friday. The question is, are the equity markets building a base to go higher, or is this just a pause before we start heading back down? You know, last week saw all the markets under heavy pressure for the last couple of days, and we've seen some minus support coming to the equity markets for the last couple of days. And just today we've seen support coming to the metal markets at much lower levels than most people anticipated. The problem, of course, is Europe, and in particular Greece. We've said this before, we believe the Greeks will default on their debt, and we also believe that politicians are desperately looking for an easy way out of this economic mess. I'm not sure what's going to happen, but we think the Greeks are going to default. As always, we rely on our trade trial technology, which continues to point the way to profits. Now let's go to the 6 major markets we track and update every trading day and see how we can create and maintain your wealth in 2011. So here we are at my home page, and we're going to go right to our portfolio. And this is our portfolio. We're going to do Monday, and here's a 1 p.m. update, and it's the 26th. So let's go to our first market. Let me just change that real quick. And this is how you can change it in MarketClub. You just basically put the numbers in that you want to see, and it saves it automatically. And we just have to do enter, and we're done. So we go back to here, the 26th, as you can see. Now, first market is the S&P 500, which we track, and you can see we have a minus 90. Looking at the charts, and we've got a let's look at a 3-month view. You can see this 1120 area is definitely important, and I think that we've got to break through this level, which I think we will do. I think this little surge here the last couple of days still has not negated this huge down move the last 3 days here. So I think we're just seeing a little blip counter trend rally. I think this trend will resume and will push down through this level. So again, I think we're just, let me get my telestrator on here to share this with you. And that is, I think we're just seeing this market will begin to roll over to the downside. I think this is just going to be a little blip like this, and then I think we'll eventually see this market break through what we consider to be this incredibly important level here, which is our 1120. I think it's going to be too much resistance unless something really comes into this market to really change things dramatically. I still think we'll see this market come down and break down and move down below these levels. Look at the big trends. The big trends are the monthlies, negative, weekly negative, and daily, all negative, so indicating lower levels for this index. So let's clear the screen, go to our next market, which is going to be silver. These markets, the metal markets, have had some amazing moves here just the last few days, and this gets back to how important trading with discipline and trading with the trend and with the trade triangles really becomes. So let's go to our next market, silver, and I'm going to scope this in just a little further. Actually, no, that's good, because you can see, what you can see now is, I'll put our trade triangles in, and you can see here's the daily, basically 41.56. You can see it right here, again here at 39.29, and again here on the monthlies at 33.50. Now, we're often asked, do we put these in afterward? No, the reality is we actually put them in when they occur. So if you're a member of MarketClub, you'll see these happening dynamically on the charts. Silver is actually lower for the year, which is amazing when you consider what we've gone through. But this is, again, we've talked about these markets changing, and you have to change with them. And this is, as I said, this is a huge, let me just put this on. There's a huge top we put into this market, and it's not likely to be broken anytime soon. Here's the top, and we have to go all the way back into January to see these levels right here, and we traded as low as 26.03 today, which is a huge break when you consider just early part of September we're trading at 44. So Trend is your friend, and the trend right now in silver, regardless of what you think, is negative, negative, negative. So everything is minus 90, strong trend down, and we expect that trend to continue for a while. So let's just take this off the screen, and let's go to our next market. Next market is going to be gold, which has had an equally interesting move. But unlike silver, the gold market is still plus on the weekly, on the monthly rather. The weekly and the daily are negative, meaning you should be out if you're an intermediate term trader, or even short this market if you're a very aggressive trader. But look where this market has come down to. Let me put my illustrator on, and we just put this on. You can see that we've gone all the way back to these levels here that we saw in early June, unlike silver that went back all the way till January. So this still basically, in our opinion, is still a bull market, and we want to wait for some signals, these weekly and daily signals, to turn green before we get excited on the long side. The market is very oversold, and it would appear as though we are going to see some sort of a bounce. We may have put in a low, at least for the time being, but you can see quite clearly you've got a couple of indicators here. The Williams percent R very negative, and the MACD very negative. So no reason to jump into this market right now to get long. And I would say best thing, just watch it from the sidelines. If you're a long-term trader, stay long. If you're not a long-term trader, just stay out of the market for the time being. Next market we're looking at is going to be the crude oil. Again, look at the action in the crude oil. I'll take some of these trade triangles off. We don't need everything in. And I'll put my illustrator on. You can see quite clearly that we rounded out here. But look where we stopped. This is a very important level of support now. And we've had these type of formations with them very, very long. It's like they're like dojis. And this is a battle between the bulls and the bears. You've got people trying to push it down, people trying to push it up, and that's why you get those very, very tight kind of little candles. They're long stems either way, but you're seeing a lot of battling here going on between the bulls and the bears right now. And a lot of these markets trading last week were just trading on money. They weren't trading on necessarily the fundamentals. They're just trading on money. Money was being liquidated in some markets and going into other markets, and this is pushing many of these markets down into new lows. So let's clear the screen a little bit and scope this down further. You'll get an idea. Williams percent R very oversold. This is negative 2. There's no reason to jump into these markets anytime soon. What we've said about the crude oil markets very, very tied into the equity markets. If the equity markets start going down, then crude oil is going to follow suit. It's going to be reflective of the economic conditions of the times. Meaning, could we go down to $70 a barrel? Yes, I believe we can, if we see the S&P 500 move below the 1120 level, which you mentioned earlier in today's broadcast. So let's go to our next market. And our next market is the dollar index, which we've been very bullish on. And as you can see, it's kind of like, we'll just go in, let me just go into a simple line chart. You can see it's had a nice move up from a good base. I still think we're going to see this market trade up to the 81 level. And you can see we have months here. You've got 1, 2, 3, 4, 5 months of action, sideways action, building that positive energy base we talked about. And again, this is going to sound like old stuff, but the reality here is the base. We talked about it. This is the breakout point right here at 76.10, and the market's still going higher. So we're still very positive on this. We think it's going to go to these levels right here, 80, 81. So stay long with appropriate stops, protect your money. And I think we'll see this market do much, much better. So let's go to our next market, clear the screen off. And I'm going to just change the color here. I just like the red better, so I'm going to go change that. But let's go back to our next market, and that's going to be the CRB Index. And the CRB Index came under a lot of pressure earlier in the day. I'll put a candlestick chart on. And you can see, we'll get close up on this one because it's going to be worthwhile. You see how this market had really these two levels here. Very, very tight level. We traded down to as low as 300.15 today. Big psychological number, 300. We bounced off that level. We may see a little more bouncing, but the market is heavily oversold, which you can see right now, and we still have this line potentially needs to turn up, and we need to turn up on this one, and we haven't done that yet. So I think we're going to still see this market be on the defensive, and I think we'll still look for this market to really just wait until it builds some sort of base up. So what we may do in essence is we may see this market just continue to build like here to build the base to go higher, but right now we're just not seeing that. So let's be patient. Let's rely on our trade triangles, which we always do, and they will keep us on the right side of the market, and we'll go from there. So hey, this is Adam Hewison for MarketClub. It's a little short today. We want to watch these markets very, very carefully and pay particular attention to the 1120 area on the S&P 500, and also take close attention to the areas we've outlined on today's report as well. Again, if you're not already a MarketClub member, do take the opportunity to try it out. I think you'll be very happy with the tools we have. These are the tools I use in my own personal trading, and they've done very well for me, and I hope they're going to do well for you. So, Adam Hewison, till tomorrow, same time, same place, 1 o'clock, I'll be here, broadcasting on the market. Let's see what happens this afternoon's trading session. Every success. I'll see you tomorrow.